Guys, welcome to Co Academy. Guys, journal entries are the essence of accounting. Okay, accounting is based on double entries, bookkeeping, and double entry is all about passing journal entries. There are six type of journal entries. Number one are opening entries. This is when you start a new accounting period and you carry the balances from the previous period, like capital account and other accounts which are permanent in nature. Okay, so for example, when you start the new books of accounts, or let's suppose you inject cash into the business, what you will do is that you will debit the cash and you will credit the capital account. So that is an opening entry. Okay, you have just injected some cash into the business. What are closing entries? Closing entries are when you have prepared the trial balance, and after trial balance you close the balances. For example, expenses have a debit balance. So what do you do is that you up and after the trial balance you credit all those expenses and debit them in the profit and loss account. Similarly, revenues have a credit balance and you close them into the profit and loss account by debiting them and crediting the income statement or profit and loss. So this is how closing entries are made. Basically, all the balances, temporary balances from the trial balance, they are posted to the income statement. Then what are adjusting entries? These are when you after the trial balance you adjust certain amounts to depict a true and fair view. For example, if you paid rent 100,000 for the year, but for the current period only 50,000 relates to the current period. So what you will do is that you will of course credit 100,000 because you paid, that is cash outflow was 100,000, but you will not debit the entire 100,000 to the rent account. Only 50,000 will go to the rent expense account and rest 50,000 will go to the rent prepaid account, because that will be hit in the profit and loss, and that will be charged to the profit and loss account in the next accounting period. So that was a adjusting entry. You adjusted the true nature of the rent by debiting prepaid expense. What are rectifying entries? It means that, for example, you bought raw materials and you had to credit Mr. X, but you credited Mr. Y. Now what you will do is that you will pass a rectifying entry. You will essentially debit Mr. X and credit Mr. Y, so that payables is recorded in the name of Mr. Y and not Mr. X. What are transfer entries? These are when you transfer balances from one account to another. For example, if there are two customers and you transfer the balance from one customer to another, and you will pass a debit and credit entry. Then there are rare transactions. For example, depreciation expense, you charge it at the year end. What you will do is that you will debit the depreciation expense account and you will credit the accumulated depreciation account. So these are the six types of journal entries. I hope it clarified your concept. Do subscribe to the channel for more videos. Thanks for watching.